Chapter 12, The Interest Rate. Human Action. Number 1, the phenomenon of interest. It has been shown that time preference is a category inherent in every human action. Time preference manifests itself in the phenomenon of originary interest, i.e., the discount of future goods as against present goods. Interest is not merely interest on capital. Interest is not the specific income derived from the utilization of capital goods. The correspondence between three factors of production, labor, capital, and land, and three classes of income, wages, profit, and rent, as taught by the classical economists, is untenable. Rent is not the specific revenue from land. Rent is a general catalactic phenomenon. It plays in the yield of labor and capital goods the same role it plays in the yield of land. Furthermore, there is no homogeneous source of income that could be called profit in the sense in which the classical economists applied this term. Profit, in the sense of entrepreneurial profit, and interest are no more characteristics of capital than they are of land. The prices of consumers' goods are, by the interplay of the forces operating on the market, apportioned to the various complementary factors cooperating in their production. As the consumers' goods are present goods, while the factors of production are means for the production of future goods, and as present goods are valued higher than future goods of the same kind and quantity, the sum thus apportioned, even in the imaginary construction of the evenly rotating economy, falls behind the present price of the consumer's goods concerned. This difference is the originary interest. It is not specifically connected with any of the three classes of factors of production which the classical economists distinguished. Entrepreneurial profit and loss are produced by changes in the data and the resulting price changes which occur in the passing of the period of production. Naive reasoning does not see any problem in the current revenue derived from hunting, fishing, cattle breeding, forestry, and agriculture. Nature generates deer, fish, and cattle and makes them grow, causes the cows to give milk and the chickens to lay eggs, the trees to put on wood and to bear fruit, and the seeds to shoot into ears. He who has a title to appropriate for himself this recurring wealth enjoys a steady income. Like a stream which continually carries new water, the stream of income flows continually and conveys again and again new wealth. The whole process appears as a natural phenomenon. But for the economist, a problem is presented in the determination of prices for land, cattle, and all the rest. If future goods were not bought and sold at a discount as against present goods, the buyer of land would have to pay a price which equals the sum of all future net revenues, and which would leave nothing for a current reiterated income. The yearly recurring proceeds of the owners of land and cattle are not marked by any characteristic which would catalactically distinguish them from the proceeds stemming from produced factors of production, which are used up sooner or later in the process of production. The power of disposal over a piece of land is the control of this field's cooperation in the production of all the fruit which can ever be grown on it, and the power of disposal over a mine is the control of its cooperation in the extraction of all the minerals which can ever be brought to the surface from it. In the same way, the ownership of a machine or a bale of cotton is the control of its cooperation in the manufacture of all goods which are produced with its cooperation. The fundamental fallacy implied in all the productivity and use approaches to the problem of interest was that they traced back the phenomenon of interest to these productive services rendered by the factors of production. However, the serviceableness of the factors of production determines the prices paid for them, not interest. These prices exhaust the whole difference between the productivity of a process aided by a definite factor's cooperation and that of a process lacking this cooperation. The difference between the sum of the prices of the complementary factors of production and the products which emerge even in the absence of changes in the market data concerned is an outcome of the higher valuation of present goods as compared with future goods. As production goes on, the factors of production are transformed or ripen into present goods of a higher value. This increment is the source of specific proceeds flowing into the hands of the owners of the factors of production of originary interest. The owners of the material factors of production, as distinct from the pure entrepreneurs of the imaginary construction of an integration of catalactic functions, harvest two catalactically different items. The price is paid for the productive cooperation of the factors they control on the one hand, and interest on the other. These two things must not be confused. It is not permissible to refer, in the explanation of interest, to the services rendered by the factors of production in the turning out of products. Interest is a homogeneous phenomenon. There are no different sources of interest. Interest on durable goods and interest on consumption credit are like other kinds of interest, an outgrowth of the higher valuation of present goods as against future goods. Number 2, originary interest. Originary interest is the ratio of the value assigned to one satisfaction in the immediate future and the value assigned to one satisfaction in remoter periods of the future. It manifests itself in the market economy in the discount of future goods as against present goods. It is a ratio of commodity prices, not a price in itself. There prevails a tendency toward the equalization of this ratio for all commodities. In the imaginary construction of the evenly rotating economy, the rate of originary interest is the same for all commodities. Originary interest is not the price paid for the services of capital. The higher productivity of more time-consuming roundabout methods of production, which is referred to by Baum-Bauwerk and by some later economists in the explanation of interest, does not explain the phenomenon. It is, on the contrary, the phenomenon of originary interest that explains why less time-consuming methods of production are resorted to, in spite of the fact that more time-consuming methods would render a higher output per unit of input. Moreover, the phenomenon of originary interest explains why pieces of usable land can be sold and bought at finite prices. If the future services which a piece of land can render were to be valued in the same way in which its present services are valued, no finite price would be high enough to impel its owner to sell it. Land could neither be bought nor sold against definite amounts of money, nor bartered against goods which can render only a finite number of services. Pieces of land would be bartered only against other pieces of land. A superstructure that can yield during a period of 10 years an annual revenue of $100 would be priced, apart from the soil on which it is built, at the beginning of this period at $1,000, at the beginning of the second year at $900, and so on. Originary interest is not a price determined on the market by the interplay of the demand for and the supply of capital or capital goods. Its height does not depend on the extent of this demand and supply. It is rather the rate of originary interest that determines both the demand for and the supply of capital and capital goods. It determines how much of the available supply of goods is to be devoted to consumption in the immediate future and how much to provision for remoter periods of the future. People do not save and accumulate capital because there is interest. Interest is neither the impetus to saving, nor the reward or the compensation granted for abstaining from immediate consumption. It is the ratio in the mutual valuation of present goods as against future goods. The loan market does not determine the rate of interest. It adjusts the rate of interest on loans to the rate of originary interest as manifested in the discount of future goods. Originary interest is a category of human action. It is operative in any valuation of external things and can never disappear. If one day the state of affairs were to return which was actual at the close of the first millennium of the Christian era, when people believed that the ultimate end of all earthly things was impending, men would stop providing for future secular wants. The factors of production would in their eyes become useless and worthless. The discount of future goods as against present goods would not vanish. It would, on the contrary, increase beyond all measure. On the other hand, the fading away of originary interest would mean that people do not care at all for one satisfaction in nearer periods of the future. It would mean that they prefer to an apple available today, tomorrow, in 1 year or in 10 years, to apples available in 1,000 or 10,000 years. We cannot even think of a world in which originary interest would not exist as an inexorable element in every kind of action. Whether there is or is not division of labor and social cooperation, and whether society is organized on the basis of private or of public control of the means of production, originary interest is always present. In a socialist commonwealth, its role would not differ from that in the market economy. Baum-Bauwerk has once for all unmasked the fallacies of the naive productivity explanations of interest, i.e. of the idea that interest is the expression of the physical productivity of factors of production. However, Baum-Bauwerk has himself based his own theory to some extent on the productivity approach. in referring in his explanation to the technological superiority of more time-consuming, roundabout processes of production. He avoids the crudity of the naive productivity fallacies. But in fact, he returns, although in a subtler form, to the productivity approach. Those later economists who, neglecting the time preference idea, have stressed exclusively the productivity idea contained in Baum-Bauer's theory, cannot help concluding that originary interest must disappear if men were one day to reach a state of affairs in which no further lengthening of the period of production could bring about a further increase in productivity. This is, however, utterly wrong. Originary interest cannot disappear as long as there is scarcity and therefore action. As long as the world is not transformed into a land of cocaine, men are faced with scarcity and must act and economize. They are forced to choose between satisfaction in nearer and in remoter periods of the future, because neither for the former nor for the latter can full contentment be attained. Then a change in the employment of factors of production, which withdraws such factors from their employment for one's satisfaction in the nearer future, and devotes them to one's satisfaction in the remoter future, must necessarily impair the state of satisfaction in the nearer future and improve it in the remoter future. If we were to assume that this is not the case, we should become embroiled in insoluble contradictions. We may at best think of a state of affairs in which technological knowledge and skill have reached a point beyond which no further progress is possible for mortal men. No new processes increasing the output per unit of input can henceforth be invented. But if we suppose that some factors of production are scarce, we must not assume that all processes which, apart from the time they absorb, are the most productive ones, are fully utilized, and that no process rendering a smaller output per unit of input is resorted to, merely because of the fact that it produces its final result sooner than other, physically more productive processes. Scarcity of factors of production means that we are in a position to draft plans for the improvement of our well-being, the realization of which is unfeasible because of the insufficient quantity of the means available. It is precisely the unfeasibility of such desirable improvements that constitute the element of scarcity. The reasoning of the modern supporters of the productivity approach is misled by the connotations of Baum-Bauer's term, roundabout methods of production, and the idea of technological improvement which it suggests. However, if there is scarcity, there must always be an unused technological opportunity to improve the state of well-being by a lengthening of the period of production in some branches of industry, regardless of whether or not the state of technological knowledge has changed. If the means are scarce, if the praxeological correlation of ends and means still exists, there are by logical necessity unsatisfied wants with regard both to nearer and to remoter periods of the future. There are always goods, the procurement of which we must forego, because the way that leads to their production is too long and would prevent us from satisfying more urgent needs. The fact that we do not provide more amply for the future is the outcome of a weighing of satisfaction in nearer periods of the future against satisfaction in remoter periods of the future. The ratio which is the outcome of this valuation is originary interest. In such a world of perfect technological knowledge, a promoter drafts a plan A, according to which a hotel in picturesque but not easily accessible mountain districts and the roads leading to it should be built. In examining the practicability of this plan, he discovers that the means available are not sufficient for its execution. Calculating the prospects of the profitability of the investment, he comes to the conclusion that the expected proceeds are not great enough to cover the costs of material and labor to be expended and interest on the capital to be invested. He renounces the execution of Project A and embarks instead upon the realization of another plan, B. According to Plan B, the hotel is to be erected in a more easily accessible location, which does not offer all the advantages of the picturesque landscape which Plan A had selected, but in which it can be built either with lower costs of construction or finished in a shorter time. If no interest on the capital invested were to enter into the calculation, the illusion could arise that the state of the market data, supply of capital goods, and the valuations of the public allows for the execution of Plan A. However, the realization of Plan A would withdraw scarce factors of production from employments in which they could satisfy wants considered more urgent by the consumers. It would mean a manifest malinvestment, a squandering of the means available. A lengthening of the period of production can increase the quantity of output per unit of input, or produce goods which cannot be produced at all within a shorter period of production. But it is not true that the imputation of the value of this additional wealth to the capital goods required for the lengthening of the period of production generates interest. If one were to assume this, one would relapse into the crassest errors of the productivity approach, irrefutably exploded by Baum-Bauer. The contribution of the complementary factors of production to the result of the process is the reason for their being considered as valuable. It explains the prices paid for them and is fully taken into account in the determination of these prices. No residuum is left that is not accounted for and could explain interest. It has been asserted that in the imaginary construction of the evenly rotating economy, no interest would appear. However, it can be shown that this assertion is incompatible with the assumptions on which the construction of the evenly rotating economy is based. We begin with a distinction between two classes of saving: plain saving and capitalist saving. Plain saving is merely the piling up of consumers' goods for later consumption. Capitalist saving is the accumulation of goods which are designed for an improvement of production processes. The aim of plain savings is later consumption. It is merely postponement of consumption. Sooner or later, the goods accumulated will be consumed and nothing will be left. The aim of capitalist saving is first an improvement in the productivity of effort. It accumulates capital goods which are employed for further production and are not merely reserves for later consumption. The boon derived from plain saving is later consumption of the stock not instantly consumed, but accumulated for later use. The boon derived from capitalist saving is the increase of the quantity of goods produced, or the production of goods which could not be produced at all without its aid. In constructing the image of an evenly rotating or static economy, economists disregard the process of capital accumulation. The capital goods are given and remain as, according to the underlying assumptions, no changes occur in the data. There is neither accumulation of new capital through saving, nor consumption of capital available through a surplus of consumption over income, i.e., current production minus the funds required for the maintenance of capital. It is now our task to demonstrate that these assumptions are incompatible with the idea that there is no interest. There is no need to dwell in this reasoning upon plain saving. The objective of plain saving is to provide for a future in which the saver could possibly be less amply supplied than in the present. Yet one of the fundamental assumptions characterizing the imaginary construction of the evenly rotating economy is that the future does not differ at all from the present, that the actors are fully aware of this fact and act accordingly. Hence, in the frame of this construction, no room is left for the phenomenon of plain saving. It is different with the fruit of capitalist saving, the accumulated stock of capital goods. There is in the evenly rotating economy neither saving and accumulation of additional capital goods, nor eating up of already existing capital goods. Both phenomena would amount to a change in the data and would thus disturb the even rotation of the imaginary system. Now, the magnitude of saving and capital accumulation in the past, i.e., in the period preceding the establishment of the evenly rotating economy, was adjusted to the height of the rate of interest. If, with the establishment of the conditions of the evenly rotating economy, the owners of the capital goods were no longer to receive any interest, the conditions which were operative in the allocation of the available stocks of goods to the satisfaction of wants in the various periods of the future would be upset. The altered state of affairs requires a new allocation. Also, in the evenly rotating economy, the difference in the valuation of one's satisfaction in various periods of the future cannot disappear. Also, in the frame of this imaginary construction, people will assign a higher value to an apple available today as against an apple available in 10 or 100 years. If the capitalist no longer receives interest, the balance between satisfaction in nearer and remoter periods of the future is disarranged. The fact that a capitalist has maintained his capital at just $100,000 was conditioned by the fact that 100,000 present dollars were equal to $105,000 available 12 months later. These $5,000 were in his eyes sufficient to outweigh the advantages to be expected from an instantaneous consumption of a part of the sum. If interest payments are eliminated, capital consumption ensues. This is the essential deficiency of the static system as Schumpeter depicts it. It is not sufficient to assume that the capital equipment of such a system has been accumulated in the past, that it is now available to the extent of this previous accumulation, and is henceforth unalterably maintained at this level. We must also assign in the frame of this imaginary system a role to the operation of forces which bring about such a maintenance. If one eliminates the capitalist's role as receiver of interest, one replaces it by the capitalist's role as consumer of capital. There is no longer any reason why the owner of capital goods should abstain from employing them for consumption. Under the assumptions implied in the imaginary construction of static conditions, the evenly rotating economy, there is no need to keep them in reserve for rainy days. But even if, inconsistently enough, we were to assume that a part of them is devoted to this purpose and therefore withheld from current consumption, at least that part of capital will be consumed, which corresponds to the amount that capital is saving exceeds plain saving. If there were no originary interest, capital goods would not be devoted to immediate consumption, and capital would not be consumed. On the contrary, under such an unthinkable and unimaginable state of affairs, there would be no consumption at all but only saving, accumulation of capital, and investment. Not the impossible disappearance of originary interest, but the abolition of payment of interest to the owners of capital would result in capital consumption. The capitalists would consume their capital goods and their capital precisely because there is originary interest, and present one satisfaction is preferred to later satisfaction. Therefore, there cannot be any question of abolishing interest by any institutions, laws, and devices of bank manipulation. He who wants to abolish interest will have to induce people to value an apple available in 100 years no less than a present apple. What can be abolished by laws and decrees is merely the right of the capitalists to receive interest. But such laws would bring about capital consumption and would very soon throw mankind back into the original state of natural poverty.